anytime money rushes towards something, valuations rocket upwards as there's more competition. I think that, yeah, interest rates coming down are going to free up a load of capital that is going to want higher returns and by definition will shift towards equity. That's a little bit of a rising tide force where it's going to put upward pressure on all things equity valuation. But I think it will be highly dispersed between different business models. So in some cases, you'll have a depressed valuation that maybe becomes 5% better because of that force. And on the other hand, you'll have hyped valuations that just keep rocketing upward. So I think in some ways, interest rates will bring more capital into the market. I think the other thing that'll bring more capital into the market, if it happens, and I have no idea if it will, is some sense of stability. If the market thinks that we are past any fears of a recession, past any fears of something catastrophic like not all trade wars are damaging, but a damaging trade war, whatever else, World War III, if the market feels like we are past those things and on a steady upward trajectory, I think that will also free up a lot of capital because people are putting money in debt for two reasons. One is because the interest rates were high, but another is because it's a nice safe haven while I figure out what the heck is going on. So I think I've figured out what is going on and I'm comfortable making medium-term bets will be a really powerful force that'll put more money towards equity.
And what if we end up in a trade war with our largest trading partners, Canada and Mexico? What do you think happens?
So I think it depends on what you mean by a trade war, right? If we're talking about relatively modest barriers that just increase prices a little bit and modestly increase inflation, then I think it has that effect. It's not nothing, but it's not going to fundamentally change the vibe of the M&A market. I think if we do whatever it is, whether it's a extreme trade war or something else, that in turn causes inflation to rocket upwards, then I think you'll see a pretty substantial downturn in M&A because number one, if interest rates go up, then I've got another use of capital. Number two, now I don't know what's going on in the market. And so I want to keep dry powder and I'm hesitant to make bets. I think all those same forces will hit. I have no idea what the line is between a digestible trade war and a disruptive or damaging or extreme trade war, but I know there's a spectrum.
So I'm curious, if consumer prices continue to increase, do you think that has an effect on M&A and deal flow in general?